What's going on, everyone? Welcome to the Nomad Hedge. In today's video, we're going to take a look at the stock market session yesterday. We're also going to glance at the dollar index and take a look at some commodity stocks and see if we find something interesting to buy at this point. So let's begin by opening up the best performer for the day. That was obviously the Nasdaq, which was up 1% on the QQQ. So if we take a look at this chart here, we can clearly see if we apply some moving averages. It's pretty far away from the 200-day moving average. According to this chart, I'm just following what the technicals are saying. So we do have a target now to around 298 or 300 on the QQQ. I don't see any of a resistance above here, so the only resistance going to be now is going to be this open gap or this 200-day moving average. But I'm looking at this Fibonacci extension of 1.618, which could also act as a resistance line from there. Because if you take a look at this line, just drawing a line from here, there's obviously some resistance level at this point, support. So this area could be of a significance when it comes to the Nasdaq. Overall, how many stocks are above the 200-day moving average for the S&P 500? And we're seeing almost 60% above the 200-day moving average. And on 50-day moving average, we're looking at around 90%. So that's pretty cool. Obviously, that was the same thing that happened in the previous bear market rally. It's reaching almost resistance here. You can see like we're almost reaching the same levels, and obviously everything then just collapsed. So we need to get above these previous high highs. And so nothing is really proven until we're above these levels. But if we take a look at the 200-day moving average, we're above the previous bear market rally. This is obviously a good sign here, but at this point, we're not near anything how things looked like. If we go back to a monthly chart here, I mean, we still have a lot of things to go here. So typically in a bull market, we see almost like 100%. Almost 95 to 100% of stocks of the S&P above their 200-day moving average. So this is not something to celebrate at this point. So, you know, fake rallies, whatever. We need to obviously get above certain levels before we can actually see if this thing is going to hold up. Let's take a look at the dollar index and see how things are faring up on the dollar index. Now, I mentioned in the previous video that we could possibly see some resistance ahead, and the 21-day was one of them, as well as the 50-day moving average. But in particular, this lower low trend line going back to September. And there it was, found resistance right there at just below that trend line, and people just buying the dip, and we're seeing people selling into previous highs. And so we haven't made any new lows yet, and that is why this needs to break below the lows that we saw back in November 15th. So the dollar index is a little bit tricky, but as we know now is that the more the dollar goes down, the more that's going to be supportive for US equities. And so what's also interesting at this point, if we take a look at TLT, we made a call to buy into bond prices here. So let's take a look at the daily chart here. Now we broke above this falling wedge here. It was a clean falling wedge. And the initial target was first the 50-day moving average. But if we take a look at this thing on a monthly chart, this has been a trend line that I mean, if we take a look at it on the weekly, we can see that they broke below this head and shoulders pattern. And this trend line here, go back to a monthly, this is the trend line. So this could act as a resistance ahead, but there's still a way to go from here. We're looking at 12% from these levels. So the TLT is a good play here. And if we take a look at the Fib extension here, 0.618, that coincides with this resistance line here that we could face ahead. So TLT has been a good play. And there's some open gaps here that might need to be filled as well. So, so far a good trade here on the TLT. And let's also move on to the S&P 500 sectors. Now, I made a call in a previous video, not the one before this one, but for which video it was. But I said that the XLU could potentially be a good swing trade. And so far it's been a good swing trade. So the initial target was first this higher low trend line here. If we go back weekly, we can see this was a bear flag within a secular bull trend. So this bear flag was broken, and testing this higher low trend line would be the first initial target here. So this has been I mean, from the bottom, I mean, almost 17% from the low here back in October October 13th. So is this going to continue? Well, I mean, we broke above this higher low trend line. We do have the 200-day moving average ahead, and then we do have an open gap that needs to be filled. So this 200-day moving average is also coincided with a fib extension of 0.618. So maybe a pullback from these levels would be possible at this point. So let's also take a look at the commodity space. Now, I'm not a fan going into agriculture because when I look at wheat and corn, these things are just breaking down. But if we take a look at uranium, these are things that nobody's talking about. We can see it, they break above this downward channel here. We can look how things fared out back in 2017, but then a test of this lower high trend line back in March 2020. And then ever since we've been in a bull trend. But obviously we saw some digestion here, but it's setting up for a potential buy here. So if we take a look at this thing on a weekly chart, we can see we're setting up here in a falling wedge. An early entry here would be around 22.71. That would be a break above this lower high channel here. But this falling wedge is clean. I mean, look at these lines here, finding support here a couple times. And if this thing breaks out, it does have a target up towards 43.36. And if we apply moving averages here, we can see we're trending above the key moving averages, and the same thing could be said on a daily chart here. And so the only thing that's resistance for now is the 200-day moving average. Now we tested a 200-day moving average back in November 14th. That was clear resistance. Back tested a 50-day moving average. So any break above this thing could be very bullish. But again, if we take a look at this thing on a daily, we do have a potential bear flag setting up here. So maybe a pullback is possible here. If we would break below this bear flag, we're looking toward maybe testing prior lows here. So from there, that could be setting up for a potential buy. And that is why I still think this 200-day moving average could act as resistance again. Good if it breaks above it and invalidates this whole pattern. But if we're breaking above the 200-day moving average, that would signal an early buy as well, and above this higher high trend line, completely invalidating the pattern. So then we're getting an early entry within this falling wedge, which has a potential target to 43. So uranium is on my watch list for now. If we move on to let's move on to gold. So the thing about gold here is that we left two open gaps here, and let's move on to a weekly chart. And so gold has been setting up pretty nicely in a falling wedge as well. So if we take a look at this in an Elliott wave, perhaps we could see a pullback to around 0.618, or if we trace this 0.5, so that would be part of an ABC pattern. Any potential pullback here would seem reasonable considering the fact that we do have two open gaps, but we're now above the 50-day moving average, a little bit extended and below the 200-day. So, but again, if we're correcting here back to 0.5 or 0.618, we're gonna fall below this downward channel here. So that is why it would be better if this thing could hold up here and break above, maybe test the 200, and then from there probably see a buy from there. So you're actually getting into the long-term trend. That's how things are looking for gold right now. It's also on my watch list. I'm looking for a pullback, and from there see if we can get an early buy here with a good risk reward towards C here. So if we potentially get a pullback to around 0.5, that would give us a gain of around 10 to 11% to C, and then we'll just have to see what happens from there. So that's gold, and let's move on to platinum, PPLT. Now, platinum is resembling a little bit uranium. The same thing goes here. If we take a look at this thing on a monthly chart, clear break above a channel here. And so within this bull flag, we're seeing a falling wedge here, which we broke above. And now we'll just have to see how far this thing can go. But we're finding resistance here at the fib 0.618. So the same thing with gold here, because commodities tend to move a little bit together. At this point, a pullback here, just look for an early buy here. If it retraced around 0.5, 0.6, that would set up also for a good risk reward, and then we could see maybe a break above this downward channel. So platinum is setting up pretty good here. We can see that the money flow indicator on the monthly has pretty much bottomed here. So last time it was this low, that's when we saw a bull move. But obviously we're seeing declining volume here, But this could be part of a new wave to the upside. So if platinum breaks above this channel here, we're looking towards a target testing this previous high here, and then we'll just have to see how this thing works out. So I'm more of a swing trade at this point in this bear market. So this would be more of a swing trade and just see what happens here. By looking at the chart here, things are setting up pretty good, and so a pullback first and then a solid buy from these levels. Perhaps set a stop loss just below here, and then we'll just have to gauge this thing from a day-to-day basis. So let's also take a look at copper, and as we can see, copper broke above this falling wedge here within this downward channel, above the 50-day, 21-day exponential, the 5-day, but found resistance here at the 200-day moving average, broke below this downward channel here. So we're looking maybe toward filling this open gap, perhaps testing the 50-day moving average here, and then see if we're getting a lot of volume here at the 50-day, it's a buy in my point. So copper could also signal maybe China is starting to reopen a little bit. We're continuing to see more of the lockdowns over there, so it's a little bit uncertain. This resistance line here pretty much coincided with the continued COVID restrictions in China. But obviously it's also driven by demand. So if China is going to normalize economic input and output, we're going to see more demand for copper. But technically speaking, now that we broke down in this back towards this channel here, a support at the 50 is going to be critical. If not, this thing is just going to maybe just move sideways here, and then we'll have to look for an alternative entry. Okay, so that was it for today's video. Market's going to be closed on Thursday, and on Friday it's just going to be a half day. So I think the market's going to close at 1 p.m. and so it's just going to be a low volume day typically. That was it for today's video, and subscribe if you haven't already. I'll make a new video in the weekend, so I'll see you guys there. Take care for now. Goodbye.